All right. Good morning to the tradingology.com trading room for Thursday, September 24th. Last day of the week for this group of sessions. Good morning, Dave. Good to see you.
Morning, everybody.
I got to give a shout out to one of our long-term members, Eric. I leveraged his magic levels this morning and made some nice profits off a little short on the ES right here. So thank you, Eric. Appreciate it. If you ever come around to watching this, I don't think he's joining us today.
Nice.
He's got have you heard about what he does, Dave?
I don't think so, no.
We should talk about that sometime. I think the three of us might, or I think you'd find it very interesting what he's doing.
Okay. Oh, yeah. It's the
dealer levels that he's working with a group of guys that define some levels when they
yes,
enter targets.
Gotcha.
I really don't know that much about it, but I'm just trying to not say anything just to protect him.
Right, sure.
Had we not been doing this trading room, I could still be making more money. So once again, guys, we're here for you.
Right. So definitely ask questions if you have them. Good morning, Greg. Good morning, Andre.
Since it is Thursday, I took a quick peek and one more time, 870,000 new unemployment claims. They were forecasting 845, so it was worse than their forecast once again. So we're still clicking almost 1 million every week.
Yeah, isn't that incredible? I mean, we're here in the just about the end of September, and we're still getting 1 million unemployment claims a week.
And something that's interesting too is right around this time, the normal expirations are happening. So what they're doing is they're now extending the benefits. So the 6 months are up since a lot of people have started claiming, give or take, when they lost it. But so that's already being extended into the end of the year, I think it is.
Wow.
Keep racking that up.
Yeah, absolutely.
And then we did have a few more questions. I don't know if we want to do like a mini part 2. I know we did run short on time for the spreadsheet, but we can pull that over and take a look. We did see full bearish herding coming in yesterday, and I'm updating it live just to see where we're at today. And we've lost the first column currently as the day has started out. But yeah, this filled out all 6 columns yesterday.
Right.
Someone did send an email saying he watched the video and he was curious about the supply and demand. We didn't talk about that, the MT supply and demand column. He was curious if you wanted to touch on that at all.
Yeah, so what I do is I look at the supply and demand when it's over 10. You can see they're highlighted. If it's minus 10 or more, or over plus 10 or more, they're highlighted. And that just indicates institutional buying and selling. So it would have to be at that level or higher or lower before it's highlighted. And that indicates institutional participation in the markets, because those tend to be very, very big numbers. So it's the same supply demand in the indicator. It's the same formula. So when we see that, remember when we look at the supply and demand and we see huge spikes in that on the indicator, that indicates that there is a lot of institutional buying. And when we get really sharp declining numbers, it's institutional selling.
And so the spreadsheet, as we've mentioned here and there, is taken at the end of the day, obviously, or whenever you enter in the numbers. And typically, everyone's looking at the sheet. So I'm pulling over the indexes with my charts that have the supply and demand. So what Dave's referring to there is basically you took the algorithms in the spreadsheet, and you can now watch those numbers live here. This is supply and demand. This is the strength. So maybe we'll touch on that column next. And that works for both the Dow Jones and the SPX are the same since they're based on the New York Stock Exchange. Then the NDX has its own indicator under the covers. I'll pull up, not settings, sorry. The studies here. I did have one other person asking that. where they're asking when you use one or the other is you go into the studies and you can select inside the SD here. So this one's looking at the NQ. There is ones for both of these. So in the premium scripts, you do have both NASDAQ and the New York Stock Exchange. So they are separated now, but you can go in here. Oh, actually they're modified. So now if they, at one time, there are some that you can modify or you can select, right? Like the MTSR, the support and resistance here. If I come in here, I can select NASDAQ or NYSE. So you select those based on what chart you're putting your indicator on. So obviously this one, I'm looking at the NDX. So I've selected the NASDAQ. So that's how, if there is a variable, you can use the same script and just select which exchange you're keying in on.
Yeah, one of the reasons why we didn't do a selection on that was because people were putting the NY on the NASDAQ and the NASDAQ on the NY. So we just said, okay, let's just keep it focused on that, and then they wouldn't have any confusion about which indicator they're using for that chart.
So that's where that comes from. Where's the SPX? We can pull that over. So we see the rally that started out and then coming back down.
So one of the options that you have on both of those charts, the SD and the ST, is whether or not you want to do a line or a bar chart or something like that. And also, yeah, you've got it on a 5 minute. 5 minute seems to work pretty well. Yeah. I like it. And you kind of want to look for those spikes too. You want to kind of look for the spikes if you see the spikes there.
Am I in the right one? Oh, I changed the midline.
Yeah, you don't want to change the midline. There you go.
I see that should just apply and I can see it in the background. There we go. So yeah, whichever way you prefer visualizing it, you can do both ways. I have it on the line, as Dave says. Yeah, you can spin this down and look at the bars.
Yeah, I kind of like to look at the bars because I can see the trend a little bit easier, and I can also see those spike ups. And yeah, this way I kind of like to look at it.
I might test that. So yeah, this is looking at yesterday's sell off at the end of the day. The strength was way down -20, which is actually, I find that's kind of low for how much that move happened.
It is. Yeah, I don't think it wasn't very high. And we also looked at the spreadsheet last night that we had the ABS was not over 15, which kind of gives me an indication that that's not as bearish as it looks.
Right.
So that's why we got a little bit of a bid and we started going higher this morning after the initial drop off. Now we're starting to go back down again. So I don't know. We'll see. We'll see here. But I don't see the SD being, that weak. It doesn't look like it's.
Yeah, I would expect this to be closer to 100 with that type of number.
Absolutely. And look at it right now. I mean, it's only -3, which is pretty.
Right.
Pretty mild.
Yep.
Yeah.
So that's where that comes from.
And it's actually positive on the NASDAQ.
Yeah, NASDAQ is 0.029 positive right now.
Yeah.
So that's the supply demand, and the strength is right here.
Yes.
So that's the other indicator that was on the chart there. So these algorithms or the math under the covers is what went into those indicators and how they were created.
Right. And you see yesterday the strength was only -0.74, which is really, really mild on a really big, very strong, broad-based institutional sell order, institutional selling, because, the retail market is like less than 10% of the market. 90% is institutional. You would see that like at -5 or -7 or -10. It would be really, really strong. But -0.74, that's pretty mild. It wasn't a lot of institutional selling.
And the last couple that we didn't cover, and I was looking at this as well for longer term. So I know a lot of people want to do not day trading where they want to put on a position, let it sit for a week or 2 or 3, and just not have to worry about it. That's where these LT signals come into play. I went back to look at last time this was negative and when it bottomed out. So you can watch this positive, it's going down. We get into negative territory, the cells color differently. So once we see this stop going negative, Right here, it went from a -2.8 to a 2.6. That could have been your signal to say, okay, long-term signal has stopped. I'm going to take a long at this point on like the entire, like the YM or something, or an MYM maybe. So here on May 23rd, you enter a long position, then you just let it ride until you see this peak out for the LT signal. So as long as this is continuing in your favor, you can stay in the position. So I'll just highlight the Dow change here, and then I'll hold the column. So we'll watch over on, I point to it with my finger like you can see me.
Yeah.
As we'll go down, this is until this stops going up, it's this -0.9. You know, then we saw this start coming down. So all through this way, that's 3,000 points. And let's say, yeah, you waited right until here and you lost a couple at the end. You know, you could say, yep, all right, volatility's coming back in. MT vol might be starting to rise here because it was down in the 60s.
And look at the third. I always look at the third column of the pipeline also. 26%,
26. Yeah.
That is just so wicked low. It means everybody's on the long side. And when everybody's on the long side, then you need to go the opposite way.
So that's how you can use that. You're welcome, Greg. This is exactly, I think, what some people want is, yeah, look for those long worms. So right now, so here then it peaked. And I would say you're safer taking long, you know, it's all about the barometer, right? So if we look at where is it peaked to the top, 40, 50, 60, 70, 80, 90. Now we're in ones, still going up. See if it gets to twos. We're not hitting twos.
No, kind of leveled off around 197 there, it looks like.
Levels off right about there. So maybe you took a long-term short around here. Then you let it sit, and we'll start to highlight everybody. And it's going down, going down, going down. It's still going down. Well, now we're here. So you could still be in a short position with 1,600 points. And you'd still be in it because this hasn't hit negatives yet. So that's how you can use that part of the spreadsheet. If you want to be a long-term player, use that LT signal.
I would use the LT signal in conjunction with the 21 and 27 day sum. So when we were at 197 there, we saw a couple 197s. We're up around 2,000 on the 21 day sum. And you know, that's a pretty darn good combination right there. Long-term signal, overbought on, you know, on a 21 day basis, we're up 2,000 points. That's a pretty good combination if you're a long-term swing trader, you know, days and weeks.
And look at what else lined up. The buy sell signal also plateaued at a -6 and started going the other way. So yeah, put those three together, or just, you know, this part of the spreadsheet. Here's your long-term player section. When these combine, that's your signal. So use one and the other ones confirm it. You can take a long right there. Or excuse me, the other way, the short, because it's peaked to the top.
Right. Yeah. The buy sell signal is more very, very short term. So I wouldn't use that. I would just use a 21 day sum and the long-term signal.
Okay. So that's like a tertiary. This isn't a decision maker. It's just icing on the cake if it's lining up.
Yeah, that's just kind of gives if you had all three of those line up, where you had the 21 day sum, the LT signal, and a buy sell signal up around 8 or 9, that's a huge sell signal. But if you got 2 out of 3, that's still pretty good.
So you take a short position, and then the key is not watching it. So yeah, that's why I would record them. I'm glad this is helping, Greg. I'm glad you like it. This is much easier than trying to be timing the market and being a day trader. I mean, yeah, I do it. Do I love it all the time? No, not completely honest. But I do it because I have learned how to do it. So it is a way of generating income. But can I walk away for a few days? Absolutely. So it's not something that I have to do, but I do it when opportunities present themselves. So I think this part is it's like, yeah, day trading is not for me. This is how you want to leverage this type of information. Use it for your long term, and don't stare at, just look at the spreadsheet and don't watch your balance. Don't watch your P&L. Because if you see this and the gold, takes a 200-point hit, you're using the higher level, I can't talk today, items. And it's just, you're not in it for the P&L, you're in it for the long term. Until these indicators say that it's going to go the other way, that's when you make your decision point. That's, I think, covers most of the spreadsheet.
That 21-day sum and the buy sell signal, and of course, I mean, you really have to think about your trade size. So if you're doing a swing trading, you want to be at a level that's comfortable for you because you can make larger profits. Like we saw, we had a 3,000 point decline or a rise. That's a lot of points. And so you trade to the level that you feel comfortable because you have a lot more point opportunities if you're doing swing trading over days and weeks rather than like a 5-minute trade. So a 5-minute trade, you might only get 10 points or 5 points on the ES. But on in high volatility and low volatility, you get a point. But on a swing trade, you can generate, 20, 30, 40 points on the SPY or the ES or something like that, or MES.
Eli's asking how he can get these indicators. Shoot an email to support@Tradinology, Eli, and we'll make sure you get all the info. There's a couple different options depending on what you need, but yeah, we'll take care of you. Which includes the spreadsheet too if you don't have that yet. So there is what they call the complete market timer system. Gets all the indicators, gets the spreadsheet unlocked. You can, the full package is available. You can actually look at it at tradinology.com/MTS, Mary Tom Sandy for market timer system. So you can start to read about it there, but yeah, shoot me an email and one of us will answer you.
Yeah, the SD signal is one of my kind of secret weapons to look for institutional trading. When we see that jump on a very short-term basis, and look, you can see the SD there got up to plus 20, which is not huge. I mean, we've seen spikes in the SD at like 600 or 1,000.
Yeah, wasn't there like a 2,000 at one time?
Yeah, and in fact, I did a tweet about that, and right afterwards, the NASDAQ went up like 1,000 points. So look for those institutional buy sells. If they offset, like you can see an offset there, it means that it went up, spiked up, institutional buy, and then it spiked back down. So there's some offsetting. Maybe it was a market maker or something trying to offset the position. But what we look for are those really, really big spikes with no offsetting position. When you see those big spikes, that means institutions are in buying. And we've hit those a couple of times, and they just, I mean, on a swing trade, they are beautiful.
And look at how the exact same one, SR1 here, is the dotted one, right? If I remember right. SR2 is this one.
Yes.
Look how it's bounced right off of them.
Bounce right off the SR levels. Yeah, we set those SR levels along with the, that's another premium indicator. That was one, actually, I don't know if we include it in premium, because premium only includes the spreadsheet indicators, but that one will give you the buy sell signals. It gives you the support and resistance levels, and boy, they are really very, very accurate.
Donnie's asking if you took a VXX trade this week, Dave.
I did not yet. I am holding out. I am going to probably enter one today. I think after looking at the spreadsheet last night and seeing that ABS wasn't over 1,500, just gives me a good, everything else was kind of, it was negative because we had bearish herding. But when I see bearish herding and I see an ABS over 1,500, now that's real bearish. That's the kind of bearish indicator that we saw back in late February. So if you go back to late February, when we had the big downturn there, we had, even before then, we had big ABS and we had lots of bearish herding. So it started even before that, I think maybe around the last week of February or so.
Yep, in February, that's when it started.
Right there. The 24th was a big signal. No way, and there's something more to this, because ABS plus the bearish herding means really big institutional selling. And it persisted for a very long time, right through the 24th of March, something like that.
Yeah, it wasn't until it started going away, then it dabbled a little bit. Then, yeah, it was exactly March 24th was when it It finally went down to 2 squares only.
Yeah, and then we started to get a little bit of bullish hurting in there. Even though the AVS stayed high, there's lots of volatility, but you can see that the bearish hurting just faded away at that point.
It's almost amazing looking at this when I see this. It's like
I know.
we seriously lived through this.
Yeah. It's like a kind of a blurry memory, but man, 1,500,
That's
2,300.
just nuts. 3,000 in one day almost.
Yeah, it was pretty much insane.
And it was just a half a year ago, and it feels like it almost didn't happen.
Yeah.
When you get back to these runs again.
But now, I mean, it looks like the ABS is starting to come down. We had a few days where it went up, but for the most part, and so we had it on the 18th and the 21st on down days. So that was very, very bearish. But now look, we had a 525 point down day and ABS came way down, which is it doesn't necessarily mean it's today, but over the next few days or weeks, that's bullish.
So that's along the lines of the anomaly, wouldn't you say? Whereas we would expect this to be much higher. So that's not.
That's right.
That's an anomaly. We don't expect that.
That's right.
All right. Any other questions you guys got? We're getting close to the top, and that'll be a wrap for the week. Make sure you guys get everything answered that you need. What else am I missing? Let's see. I don't think crypto's doing. How's crypto looking today? Or I didn't pull up the Dixie yet either.
The Dixie's up 0.25%. Cryptocurrencies got hit a little bit yesterday and the day before, and they're not really doing anything. XRP hasn't really moved. It's still at 22.5 cents. Ethereum's at 337. It was 342 a couple days ago. We had Bitcoin at 10.5-ish. It's 10.38. It dropped down to 10.2 yesterday. So it's not really doing much. It is a little bit green. We see a little bit green today, but not very, very much.
Andre says gold and silver. I'd say gold and silver is probably a blue light special though right now.
You know, I like silver here. I like it a lot. I started buying a little bit at 24, but I like it better at 22.
Yeah, I'm glad you brought that up, Andre. Appreciate that. I was looking at that last night, and it's like, ooh, everyone's mad because they think they lost all their money. It's like, no, this is time to buy the dip on silver.
Yeah, well, silver and gold are just like the cryptocurrencies. They're going to be opposite of the Dixie. So when we see the Dixie starting to decline a little bit, if it hits those levels we talked about yesterday, we're going to get a nice pump in silver. I'm looking at just under 20 because I think if it just dips under 20, people are going to go crazy and think, oh no, I'm going to lose all my money. So they're going to start selling, and that's the time to buy. When everybody's selling, that's the time to buy.
Yes, Donnie, we are in last week's BXX trade still.
Yes.
Andre, I don't know what the best place. I personally get it at gold, silver, but to each their own. If you want to buy physical or if you want to buy a minor stock or a futures contract, there's multiple options that you can buy silver. Just depends on what you prefer.
Yeah, if you got SLV, the ETF, you could bring that up. I'm not really a big physical silver guy or gold. I know you are though, because you're stacking them.
Just in case.
Yeah. I was talking to somebody else who's also they like gold, they like the physical gold, they like the physical silver, and so I told them, well, if we do ever hit that economic apocalypse, you want whiskey and cigarettes. So
there you go.
Make sure you get some of those in too.
Yep, that's part of my dip pie on M1 Finance. Alcohol and cigarettes.
That's right. How's that doing, by the way?
It hasn't done much actually. It's pretty level right now. Last I looked.
Yeah, I think it's because of the dollar.
Probably. I think it was up a couple hundred. That was about it. Let me pull up a silver. I got too many charts. Let me just use this one. Here we go.
Andre says, "Where's best to buy silver?" Okay, so it's you got that website. What it was? It's
goldsilver.com is where I go, Andre.
goldsilver.com.
That's Mike. That's our buddy Mike Maloney.
Yep.
One of
And
those-
he said, Dave, you mentioned another place. I don't think so. Not to buy physical. You mean physical silver or gold? I don't buy it. There is another place though. But if you go through Gold Silver, I think Mike Maloney will probably give you the best deal. He deals with another company that I can't remember the name of it right now, but he's an institutional buyer. He's a large buyer, so he gets really good prices from them. And you could go to them directly, but I forgot. Oh, not physical. It's just SLV, so I would just use the ETF.
There's the ETF on SLV. It's at 2080 right now.
Yeah, I've got a buy order in at 1975 on that. So if it's 1975, I'm in.
And then GC's at 1850 for the futures contract on gold right now. I haven't watched these guys in a while, outside of just the physical price, the spot price.
I mean, everybody says don't use the ETF, don't use the futures contracts because they can't deliver and stuff like that. But I'm in it for a very short term. I'm in it for a few days or a couple weeks.
Yeah, absolutely. Yeah, short term, you're absolutely. So if you guys are curious about that, why Dan does this and why Dave does that, it's all about what you're using it for. And I buy a physical not for short term gains; it's for long term protection.
Right.
So they both have their use cases. But yeah, definitely opportunities to be had there. And for the guys, just another reminder, 1 o'clock Eastern, Wealth Masterclass later today. Emails went out. Hopefully everybody got it, but in case any of you guys haven't seen it and you're part of that, that will be later today. Separate Zoom, don't come to this Zoom. There's a different Zoom link for that. I think that'll probably do for my final announcement. Go ahead.
Yeah, so that's, yeah, if you guys are in it, make sure you either hear the recording or come live if you can make it, because we got a lot of interesting stuff to cover.
And there will be another one in October, correct?
There will.
That's on the schedule.
That's right.
Good job, Greg. You didn't get an email. Weird. Shoot support or shoot Strong Market an email on that, and make sure maybe it's an email glitch somewhere. I think I sent him out a couple for Dave too, just to make sure we're covering all the bases. So, but as long as you got the link, you're good to go. With that, sir, I think we'll call it a session. You're welcome, Greg. Happy to help.
All right, guys. Yes, Curtis, you have a good weekend too. And we'll see everybody on the Wealth Masterclass at 1 p.m. Eastern time today.
Appreciate it, Curtis. Thanks, Don. See you, Greg. We'll see you later, Greg.
See you, Greg. Bye, Don. All right, Dan. See you in a few hours.
All right. See you later, Andre.